Hello traders, Gary Wagner here, just about 10:20 in Honolulu, 4:20 in New York. It is Wednesday, 29th day of June, 2016, and this is the Daily Report for Gold and Silver. We do have nominally modestly higher pricing in the precious metals markets. Gold currently trading up about 340 when we look at COMEX, and it is trading at 1321. Low on the day is 1313, and the high has been 1331. When we look at Forex, that is trading, and this is spot, of course, at 1318.50, low 1310, and the high 1327 on the day. So traders, what are we to make out of the last couple of days of trading? Of course, we had that tremendous upside surge, that coming in as the Brexit vote was passed. That is right here, tremendous upside move, reaching an intraday high of about 1360. Of course, the market softened on the close. Last 3 days, if we take a look at it, has had a series of inside days in terms of the range of this Brexit candle, let's call it. But what we can see is that we do have alternating candle color. We are up today. We're up about 420 per ounce at 1322. That's our current print. My sense is, as it was the other day, and this is even though we were stopped out of our trade, I think I might have put our stop in a little bit too tight, a little bit cautious because we have had such great profits this year. I don't want to see them erode. But what I am seeing is what I pointed out a couple of days ago, and that is the fact that we are getting a consolidation in the market. In other words, when a market has really moved to the next level, it tends to rest or consolidate before moving up to higher ground. Now, you can see that consolidation kind of unfold in a multitude of ways. Sometimes what you'll see, of course, is a compression triangle. We got that here before spiking to higher pricing. And you also saw that here, a compression triangle in which the range begins to narrow. And as that range narrows, we get a spike to the upside when we hit that apex. Here, we had a genuine sell-off. This is what we're calling the top of our B wave. And that's when we went into a defined A, B, C correction. And I absolutely believe that that completed this wave 2 with these two C's here also. I also believe that we have seen waves 1 and waves 2, and we are firmly within a wave 3 right now. Now, the key is, as I've said over the last couple of days, is this market going to consolidate? And when I say consolidate, what I mean is it will trade within a narrowly defined range. It can make a lower low, it can make a higher high, but not an extreme high or an extreme low, and it will simply consolidate. Will we see some sort of consolidation, or will we see some sort of a move where we've got the spike up, and then we get a correction to some area, and then another wave, so to speak? Now, traders, another way to look at current price action is to look at the same data. This is a daily chart, although this is in Japanese average format. And the information we can glean from this type of chart is as follows. When we take a look at the ranges that we've had in the candle size, we can see that really over the last couple of days, we have had a diminishing range. These body sizes are getting smaller. Realize the key difference between a Japanese average chart and a standard candlestick chart is a candlestick chart derives the open and the close from the true open and close, whereas a average chart uses the midpoint of the prior candle as the open of the current candle. So what you can then see from that, and let me go ahead and move my pointer back up, but what you can see from that is this open right here is this midpoint of this prior candle. This open here is the midpoint of the prior candle, and so forth. And so you've got this open that is, although is moving up because the ranges are not as great, you do have a diminished body size. On the bullish side of the fence, so to speak, we still see a market which has had trading days in which at no point during the trading day did you see price action go below the midpoint of the prior candle. That's how you get this absence of tails, and that's what you look for on a market moving up, is the absence of tails, because as soon as you see a tail, such as here, that's really a really strong indication that this market's going to reverse. We haven't seen that as yet. What we have seen is diminished body size. Now, we can take a look at other action in the market in which, for example, here, you never saw any tails. You went right to a red candle. On this particular spike up, you also had a diminishing in size, and the red candle was the first indication. So you can get scenarios in which you'll see a tail form, and then you'll get those doji-like candles, or you'll go color change. So what we're looking at now is consolidation in the market, but it could still be looking at a market that is just pre-correction state, so to speak. In other words, we still could easily see this market, and I am really bullish on the market, don't get me wrong, but whether or not it corrects in this area, because I believe that we've got a 3 count, and I do believe that it will correct at some point and then move into a secondary wave, all within this wave 3. So traders, for the moment, we are going to sideline with no active trades. We'll take a look at this again tomorrow, and we do, of course, have a shortened trading week next week as we go into Independence Day holiday here in the United States. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.